Hello, 4-Year Journey followers. It's Bob Lucas. I hope you're doing really well. It's been around about a month since my last update, and I know many of you have asked for an updated video, many new questions, and I wanted to address some of those questions, some of the feedback I've received in a new video here today, essentially covering my views of where we stand today within Bitcoin, and also where we stand within the 4-year journey that I outlined going back starting in January. So I first want to touch off and talk about kind of an introduction to the journey for some folks who have not seen some of the videos. There's been around about 8 videos already, and I want to touch on and summarize some of those videos and talk about how we got here and what some of our objectives are in these videos. Then I want to get in and talk about the path to 200,000 price in Bitcoin within this 4-year cycle. There are many, many paths to the top of this cycle, and they could occur sooner or even later within that 4-year cycle. And I want to focus on some of those scenarios. But more importantly, in discussing the path to 200,000 Bitcoin, I want to really outline the fact that there's an obsession with short-term price and the gyrations of the market in the shorter term or intermediate term, and how I think this is a problem or dangerous for most hodlers, or smart hodlers as I like to say, in that it distracts us from really the main objective, and the fact that really we shouldn't be focusing on kind of the path to 200,000 or the path to the top of this cycle, but that we should be focusing more on the psychology, our own personal emotions and expectations, and more importantly, the goals. And keeping those front and center is going to allow us to continue to ride Bitcoin as it falls sharply and corrects at certain times, but also as it moves sharply higher in given periods of time, and how best to avoid being either shaken out or avoid the need to sell on some of these moves higher. And then from there, I also want to talk about the model portfolio that I've outlined on the website, talk about some potential buys that I may be looking at, so looking at adding to my portfolio, given if we do get another sort of serious decline from this point, but also begin to discuss some of the exit strategies. So some of the hodlers in this space, going back kind of more to the 2011 to 2014 timeframe, will hold Bitcoin through the massive bubbles and crashes and so on. And in the end, it's probably going to serve them fairly well if they're able to do that. But I think I have a better strategy. I think I have a strategy where we can ignore the short-term liquidity and volatility that we see in this space. So we can ignore the 30 to 40% corrections, but we shouldn't ignore the crashes, and we shouldn't ignore the bear markets that we see that brings Bitcoin down by 80 to 90% in price. So we want to be capitalizing on the massive 10x and 20x moves that we see towards the top of a bubble, and then we want to be getting out and we want to be scaling out, but we also want to be then focusing on getting back in at the bottom. And for the reason simply being is that we want to be able to maximize obviously the value of our portfolio, but we want to also increase the amount of Bitcoin that we have over the next 4 years and 8 years as well. So it's important to be able to capitalize on these massive swings in price that we see in Bitcoin over these 4-year cycles, and double up and triple up and even quadruple up our amount of Bitcoin that we hold, even as the price of Bitcoin over a longer period of time continues to go higher. And I want to touch on that today. That's a very big topic, and we're still early in the 4-year cycle, but I want to outline briefly kind of some of the exit strategies that I'd be employing, and also talk about some of the exit strategies I employed in the last cycle top in 2017. And then I also want to talk about Bitcoin in a worldwide recession and a liquidity event. A lot of people have asked this specific question on how Bitcoin is going to perform in a recession, and I want to touch on at least my views on how I think Bitcoin is going to behave and perform in such an environment. And then lastly, I also want to introduce what I call a left translated cycle possibility for the 4-year cycle, meaning the possibility that we're looking at a cycle that tops early in the 4 years, in the 4-year cycle. So we had a 4-year cycle low December 2018. The next one is not due until late 2022. That's a 4-year period. But what if the top doesn't occur, say, at the year 3 point, but what if it occurs at the year 1 to 2 point? So what if it occurs 18 months after a low, or what if the top occurs in 2020? There's a possibility of that happening, and the reason why I want to introduce this possibility now is because of how Bitcoin has performed in the past 8 months coming out of the cycle low. Some of the market structure, or the price structure that I'm seeing, does have some left translated type of structure to it. I just want to introduce that a little bit and just make people aware that that is a possibility as well. Okay, so let's get into it. Thank you. Also, I will place, for the 6 topics that we have here, I'll place the minute and second point in the video where these appear, allowing you to kind of, if you want to, fast forward to each of the individual topics. So let's get into it. Okay, also as a way of introduction here, this all started back in late November of 2018, maybe early December. And the video I recorded was this one here called Bitcoin's 4-year cycle opportunity, original author. This one was published on my private site at the Bitcoin Live website. And it was ripped off in February by somebody who had joined the site and posted it anonymously on YouTube under their own name, I guess looking for clicks and views, and it went viral at that point. So because it went viral, I ended up releasing this video here on YouTube back in, I think it was early February, soon after it was published. My original intent was not to publish this on YouTube, but once it was out and it had 30,000 views very quickly, I decided to publish it here, and then that's kind of how this all got started. So I encourage you, if you have not seen any of these videos, don't watch beyond this point in the video. Stop, go to the videos under my channel. First of all, of course, follow the channel. I have a lot of videos coming out in the future, but also I do post in the community section as well. So turn on your notifications. I do some updates there, so especially when the market is moving rapidly, try and provide some encouragement to followers of the channel. But definitely go in and watch this 4-year cycle video. It talks about the original, around the cycle low point and calling for a 4-year cycle low. I think price was around about 3,700 at that point, and I basically essentially said, start getting a position, buy now. It may not be the absolute bottom, but we're just about there. We're just about the 4-year cycle low, and certainly not to panic sell, and certainly should buy. That was followed by a pretty important video here around in April, when we had some clear evidence that the 4-year cycle was in place. And this one here, I think, also went viral, 126,000 views. I think this is one you want to watch, the 4-year cycle left off. And then from there, the Bitcoin 4-year journey, the right HODL allocation. This talked about the model portfolio and talks about kind of how I view my allocation to Bitcoin relative to my net worth, relative to overall risk, personal risk that I'm taking in the space. So I encourage you to stop and just watch these 3 videos. They are in total over an hour in viewing, but it will certainly help you grasp and understand what this is all about, how I look at cycles, what cycles are, and it'll help frame the rest of this video. So please go and take a look at that. And again, as always, follow the channel, and there'll be more videos coming. In addition, I encourage you to visit the 4-year journey website. The URL is 4yearjourney.com. On this site, I have an idea of, or a description of what the site's about. We also have all the posts, all the videos, and more on here. So anytime a video comes out, it'll be posted here first. And then we also have the model portfolio that outlines the holding, when purchases were being made, and also a strategy on when I expect to be getting out and buying more perhaps. But it certainly gives you a good breakdown of the portfolio itself and the goals and expectations for the future. Okay, let's talk about the path to 200,000 Bitcoin. I don't want to spend too much time going over why I believe we're going to go to 200,000 in this cycle, or possibly above that. That is clearly covered in the 4-year cycle videos that I just mentioned before. Again, if you need to know or want to know why, go over those videos again, and you'll get a fairly good sense and idea for my views on that. But very quickly, the 4-year cycle spans price action from one major low to the next major low. And I have it marked starting back in the 2011 timeframe, because that is essentially when people began to transact in Bitcoin and we had some true price discovery. We did not have true price discovery in 2010, as evident by the 10,000 Bitcoin for pizza, for example, but there really wasn't any real exchanges on board. There was no real onboarding for fiat to Bitcoin. It wasn't until 2011 that we began to have some real price discovery, and that's when you saw Bitcoin get up above the $1 mark and go higher. From that point, we had 142 weeks to the first real big bubble top in 2013 at the sort of 1100 or 1200 price range, and then we had a 58-week bear market decline into the first real major 85% decline, even though we had one here as well early in that cycle. But this was the first real mainstream decline into the 2015 lows there. That was the end of the first 4-year cycle in Bitcoin. 142 weeks up, 58 weeks down, exactly 200 weeks or 200 bars here on the weekly, almost 4 years, followed by a flat or sort of foundation building base here, and then a slow and then became rapid bull market climb over a 153-week period, which is just shy of 3 years. 153 bars higher to the top in 2017. Of course, most of us were around for that. And then we had a subsequent 52-week bear market. So similar structure again in the next 4-year cycle, where we came up for 153 weeks, down for 52, for a total of 205 weekly bars. And of course, in a 4-year cycle, you have 208 weekly bars. So both of these closely resembled a 4-year cycle pattern. And I think what's important here is to understand that although I am predicting price in the cycle, I'm not trying to predict exactly when that top occurs and when it happens. In cycles, we focus more on time and not so much on price. I'm using prior price action and price behavior in the prior 2 cycles to predict the price. But I'm really more about time, and I'm really more about cycle lows and major lows, because cycles are measured from low to low. So if we look at the end here of the bear market and the end of the bear market, the 4-year period between 1, 2, and then now 3, pretty much the cycles are telling us that we're not going to have another cycle low until late 2022. That's when I expect the end of the next bear market low to occur. But what happens in between really is something that I think nobody really knows. And as the market matures and as the technology grows and adoption hopefully begins to grow and mainstream attention comes into play here, and maybe an ETF gets approved, where the top in the cycle occurs will vary and will change. But what should not change is where that low occurs. So the cycles don't change. I hear a lot of people talking about how the cycles are going to shorten or they're going to lengthen for whatever reason. And I can tell you now that they won't. They just don't in cycles. Where the price high occurs can certainly change. And I'll cover that in the last point where I talk about a possible left translated cycle. Left translated cycle means that the top occurs before the midpoint of the 4-year cycle. And I'll get into that again, like I said earlier. But right now, if we look at the prior 2 cycles, what we can say is if the market structure remains similar, then we have mostly a 3-year period up, so 3 steps up, 1 step down structure to the 4-year cycle. And it's within this cycle low in December and the projected time of a top in around about the October timeframe in 2021, that anywhere between those 2 points is I expect price to move higher and hit that target of around about the $200,000 to $250,000 price range. That $250,000 price range is roughly a 10x move from the highs set in 2017. Same as this move here was a 10x move set, actually was closer to a 20x move set from the highs of the bull market of the prior 4-year cycle. So again, no real science or definitive science behind that, just a guide on price action. But you can also, on a log scale here, kind of draw in, sort of a projection here, right? Like a line, a mean line. So as the bull market goes higher, obviously it stretches way, way beyond the mean. The Bollinger Bands extend, and then the bear market decline brings it back to earth, back down towards a mean. Then we rise along that mean for a while, and then of course we extend higher again. But exactly where this mean line exactly is obviously hard to determine, but you get the general idea that the trend over time for this technology, which is still in the early phase of its adoption, is following this type of trajectory. So there's a lot of price evidence over the past couple of 4-year cycles that tell us that Bitcoin is heading up into this area. And of course, from a market cap standpoint, we're still talking about Bitcoin at around about 3.5, 4 trillion at the most, at that $250,000 or $200,000 level. And it's at that level, or at that point, where I feel Bitcoin probably has much more of an intrinsic value at this point into an adoption. And we may even see after that, and I'm not going to touch on it today, but we may even see after that a 4-year cycle that goes from 2022 to 2026 that doesn't perform like this, that performs in a more of a sort of a sideways motion for the overall technology to kind of, and adoption to catch up. But that's a topic for another day. I think when you look at gold at 8 trillion in market cap, getting Bitcoin up to kind of that 3 to 4 trillion market cap by 2021, 22, I think makes a lot of sense, at least to me. And I think this is where Bitcoin is headed. Now, how does it get there is the question. I think a lot of people are obsessed with the intermediate time frame price action when they claim to be a hodler or a long-term investor, and that's just natural for any human to be impatient and to be greedy, I guess, and to really try and validate their bias that we are going to get to the $200,000 price range, and they need to focus on the price action in the short term to help them feel comfortable and confident that we are going to eventually get there. But I'm going to talk about how that is not the right strategy to have as a long-term hodler. Now, I have my personal views on how I think price eventually gets up to this level over the next 18 months to sort of 24 months. And I don't think we break out of that $20,000 price range until next year at some point. So another 4 or 5 months of possibly going somewhat sideways before we get up, test this area, and then eventually break out. And once we do break out and it attains a lot more media attention and people start really getting in, then we can begin to accelerate those gains up to that point. But for a hodler, it really doesn't matter, and it shouldn't matter, because if you do recall in my 4-year cycle videos, that's not what I thought would happen from this point. I actually thought we would get more of a structure like we had here, where it built more of a base, so something more like this, and right? So it had this kind of path, which ultimately goes to the same point, but it spent much more time building a base between this sort of 3,200 and 6,500 range, then broke out and then filled the gap between that 6,500 to $20,000 range, and the third phase was going higher. So I'm going to zoom in here, but there are other alternatives as well. We could quite easily continue this move higher, smash 20,000 in 2019, get up to sort of $50,000 range by the end of the year. I mean, if you look at the trajectory from where it's been so far, where it's gone so far, this is the blue line here, it can get there. It has the ability to do that. So what's my point? My point is that I'm not Nostradamus myself. I'm giving you a time-based view on Bitcoin, and I'm looking at the price cycle, price action behavior, and telling you that you should be hodling here and not be worried about those those short-term moves. Because when you focus too much on these short-term moves, you begin to then second guess the hodl strategy, or you begin to get greedy and start to think that you're smarter than just holding for the next 3 years, that you can actually sort of obtain even greater gains by market timing over the intermediate time frame. And I'm not talking about trading. We all know that unless you're a professional trader or somebody that's really focused on improving your trading skills, that's not going to beat a hodl strategy. I'm talking about those so-called active investors who think they can probably sell out on short-term tops, buy a 30% drop, and so on. And I think it's been very clear, and I know it's clear from the comments, that many of you tried to do that throughout this, let me zoom in here, throughout this move higher here, and it didn't work for you, right? Here it is here. It didn't work for you. Even when it got up to 5,500 rapidly, I know people got out and said, I'm taking some profit. I'm going to buy back in at 3,000 or 4,000. It didn't happen. And then we had this massive April move. And again, some people got out right here at the 7,000, 8,000. Many did actually in this point here. And then we had a very brief pullback and then a shot up to 14,000. And so many of you got out here, didn't buy back in because you couldn't buy back in. You were locked out of that move. And then you capitulated in the sense that you FOMO'd into buying at the $10,000, $11,000, $12,000 range, missing out on that whole $4,000 move, essentially reducing your Bitcoin stash, the amount of Bitcoin you had, because you were worried it was going straight to 20,000. And then it pulled all the way back to 9,000, and here you were kind of like losing money. You're losing money on a certain portion of your portfolio. My point here is that we're going to continue to see that. We're going to continue to see 30% declines in the market, 40% declines. They're going to be natural and normal, because when you look at the bull market here and the one before that, all these cycle lows, and these cycles are the 60-day cycles, all these were pretty much 30% decliners. So if you're going to try and time these 30% or 100% rallies and 30% declines, I can almost guarantee you that you're going to miss one or two of these. And if you miss one big one like this, it's going to cost you dearly. It's going to cost you dearly in terms of your overall portfolio value and, of course, the amount of Bitcoin that you have. You're not going to be smart enough to be an active investor in this space. Some of you might be able to, but I can guarantee you that most of you will not be able to do that. But more importantly, why the hell do you want to? I mean, how greedy do you want to get when your goal is a $200,000 to $250,000 Bitcoin price? Again, I'm not guaranteeing that in any way or shape or form, but if the goal is to get to 200,000, then that's enough, right? We're at 10,000 right now, and we're talking about a 25x move up to that level. Isn't that enough? I mean, a $10,000 investment right now is going to be worth $250,000 at that point if we get to that level. Why complicate the strategy? Why try and obtain more out of it when those types of returns are pretty much unheard of in the history of investing in any asset class. So you have an opportunity right in front of you here, and you have a clear path and a narrative that has, some evidence behind it. I just want to tell you that there's an obsession with short-term price here that is coming out of the need to get more out of this, or you're greedy to get more out of this, when really you should be saying to yourself, hey, I want to be at 200,000 Bitcoin with most of my Bitcoin preserved, and I want to be able to cash out a lot of them at the next market top, and I want to be able to walk away from this without any regrets, and that you executed on a plan that you saw early on and you held through to the end. Too many stories of people getting shaken out of position and then never being able to buy back in. If we get a massive move like this one here, like this trajectory here, and you've gotten out because you want a lower price, you want a couple $1,000 lower price, you may miss out on a $100,000 move. It really can happen. It actually already happened right here, and I outlined this in one of my videos. This was not my primary expectation to get to $14,000 by the summer. It just wasn't, but I clearly showed in one of my videos that that was a possibility, just like this was a possibility here. And I said you don't want to be market timing and getting cute on price, because this could happen. If it does happen, you'll be locked out, and it's exactly what happened. So focus on the psychology and the goal that we have in front of us. I keep harping on the goal because that should be, from a smart hodler standpoint, the primary objective and the primary focus that you have in this entire time frame. And yes, it's slow and it's boring, but who cares? This is the goal that we have outlined, and this, if we can execute, will pay off handsomely for you and your family. In fact, I have a video dedicated to this topic in the channel library. I believe it's called Process and Discipline. Please go and watch that. It's very important. It talks about the entire process and discipline that hodlers need to have, and we need to get away from that trader's mentality, even when it comes to sort of actively looking at the day-to-day and week-to-week price fluctuations. Please go and watch that. I think it's very important for you, and it certainly would help. All right, let's move on to the model portfolio, potential new buyers, and exit strategy. So as you know, 25 BTC is what the model portfolio is holding. This was modeled on a $100,000 purchase made near the bear market lows. That portfolio is now worth $258,000, up 158%. This is a portfolio that does not market time, as I said, but the goal and the strategy is to liquidate most of, if not all, of the BTC holding by the top of the 4-year cycle. And where that exactly occurs, of course, as I mentioned, I cannot tell you. And a lot of the liquidation is going to come from my view of the market at the given time. I will not have hard and fast price targets on all my sells, except for the first few initial sells. So let's look at this. At the $4,000 price, 100,000, what I'm looking at doing though is buying, adding to the portfolio if we get down to the $8,500 level. At the $8,500 level, I believe we have a 40% retracement from the highs set in 2019. And for me, in a bull market trend, a 40% retracement is an absolute green light to add to my position. Now, we may get more 30 and 40, we will get more 30% declines in the future, but I have no goal, no thought of adding to my overall holding in the future. I'm only looking to add here while we're still early in the 4-year cycle, and while price is still relatively close to the 4-year cycle low. I have no real goal to add at the $20,000 and $30,000 and $40,000 levels. For me, at that point, the opportunity and the risk reward begins to obviously decline So I don't want to be adding. But at the $8,000 level, we still have this kind of 20x possibility, or 20, or more, 25x possibility. So I'm okay with adding some to my position because it's coming on a 40% decline in a bull market, which typically is about the extent of any decline. Can we get more? Of course, we can get up to 50%. But point is, fairly well shielded at that point, I believe. And my experience tells me that in a major uptrend or bull market, you want to be adding on some of these significant dips, but also adding early in the cycle and not later in the cycle. But I'm also looking to sell and this is confusing a lot of people because they're like, well, yeah, you said you weren't going to be selling until higher up, and you're selling at 16 and you're projecting 200,000. It doesn't make any sense. It's just crazy. And you know what? Everyone has their own strategy, and this is my strategy. And this is what I'm doing. And I've been investing for 25 years in so many different asset classes, and I feel comfortable in selling 20% of my Bitcoin portfolio, the model portfolio, at $16,000 for one reason only, and it's to minimize risk. Sorry, it's two reasons. One, to minimize the risk. So what I have capital at risk. So if I can sell the 5 Bitcoin at 16,000 and get 80,000 out of that, then my capital at risk would drop to 20,000. So what does that mean? It means if this all goes nowhere, right? If for whatever reason we fail to break out of the $20,000 price range, and it could be a whole host of things. It could be a massive worldwide sort of government regulation crackdown on Bitcoin. It could be a major security kind of breach that is just wasn't predicted. Obviously, there's a number of sort of external threats that possibly can impact the price. They are outliers. They are unlikely, but they are there. They are risks. We may get a double top at the $20,000 price range and then spend the next 4 years or 6 years over the next 2 4-year cycles chopping between 5 and 20,000. I don't know. There are no guarantees in investing, and for me, getting getting most of my initial investment back and still holding 20 Bitcoin, so 80% of my allocation long, allows me then to ride with a lot of confidence and a lot of strength when the market begins to show extreme volatility and begins moving around by 40% over, say, a 3 or 4 week period. I'll be okay with that because I'm riding with the house's money, so to speak, at that point. So don't confuse this as kind of saying, oh, I don't have faith in my prediction or my views, or no, it's just basically saying that I want to take some off the table early, okay, in case there's a risk or a threat that this doesn't go where I think it's going, and then allowing me to ride higher. Now, my next profit target is to be determined, and that one may be price specific as well. But I can tell you now, it's not going to be before the $56,000 level. And why is the number important? Well, 56,000, I believe, is very close to the 1 trillion market cap. And I like that number. And also, it's a good 10x move from my initial investment. So at that point, that would be significant gains. And I would still have 15 Bitcoin at a $50,000 or $60,000 price target, or a price. So the portfolio would be sitting very, very comfortably at that point. But beyond that, and this is not for this video, but beyond that, I'm going to be looking for evidence in the cycle that it's time to get out, or it's time to start scaling out. And some people like to say, well, you can't do that. It's impossible. Nobody knows. Well, yeah, maybe it is. But in the 2017 market, I'm going to pull up Twitter right here. Okay, I'm not going to claim to know when to get out exactly, but I did trade the 2000 bubble. I traded the 2007 and 2008 market. I've traded the gold 2011 top, which I got out right near the top. In 2017, I sold Bitcoin at 20,000. I sold it for gold, in fact, and posted this on Twitter on December 17th, 2017. pretty much sold 40,000 worth of gold on that day. I think that was either the top or one day short of the top. I was buying before that as well when I sold on December 13th Bitcoin for gold as well. And here's another tweet that I got 5 likes. Nobody was following me in Bitcoin back then, but yeah, basically if you made a killing in Bitcoin and crypto, this is December 13th. Don't blindly follow the hodl screamers, I should say. Yeah, keep cashing some out as it moves higher, but maintain your exposure. So this is kind of the thinking here, is that you don't want to be caught in the eventual top, the bubble top that then crashes, because it's going to be hard to cash out when you see the price of Bitcoin at what it was, and then it goes down by 30-40% rapidly, which always happens at the top of a major move. It's very hard to cash out because you're so excited about the price it was at just a week or two before, and you end up getting caught as a deer in headlights and running your exposure all the way down. I couldn't tell you how many people held their Bitcoin from 20,000 down to the $3,000 level, and many of them puked that position around 6,000, eventually giving up after a year of declines. So as it gets, and I know all the telltale signs of a market that is just in pure bubble territory at that point. There's technical evidence, but there's also a lot of psychological and emotional type of information data that we can get from social media to help us there. But this is kind of going to be the thinking, is that when we get to that level, we'll start taking profit, and it's going to be okay, right? Because if you're in at this price level and you're up 20x, you're going to be fine with that. That's the goal. Nobody's going to be able to get everything out. Even where I sold at 20,000 Bitcoin, I pretty much got a lot of my initial investment, and then maybe a couple X more out of that. I didn't get everything out. I did hold quite a bit of it down as well, and I shorted against it as well, or hedged against it. But the point here is that you're not going to be able to time the top perfectly, and it's okay because we're in early. And the fact that we're getting in early and holding is going to allow us to start scaling out at reasonable levels near what will be the end. It may not be the absolute end. Bitcoin may go up another $40,000 or $50,000 a coin near the end, and it probably will, based on kind of how bubbles end and the volatility that you see. But again, that's going to have to be something that we've ingrained into our minds, and that we're prepared for when it gets to that point. So there is an exit strategy. Again, it's not something I can give you. I can't give you a TA script, for example, that says X% over a moving average or anything like that. It's more about specific price action. It's more about the psychology. It's all about crypto Twitter and everything else like that. That's going to give us the idea of when to get out. So we want to, though, scale out of some purchases. Like I said, 16,000 is one target, 56,000 is probably a second target. Those get the money back. Those put some money in the bank, right? Those allow us to get to the point in the future, whether it's at the $180,000, $220,000, $250,000 level, where we are calm and collected, and we will see the market as it's evolving in real time, and with a very composed mindset. That's really my goal here, is to not get carried away in the future with price action, and to execute as best as we can when the time comes to cash out. All right, let's switch the topic here on my views on Bitcoin in a worldwide recession and liquidity event. These are two different things altogether. A liquidity event is a situation where banks are afraid to lend, credit freezes. There really isn't any the underlying pipeline or mechanisms of the banking system kind of freezes up, and short-term rates skyrocket. Essentially, everyone panics, and asset prices drop suddenly and quickly. So there are margin calls. There's a run to cash, run to treasuries, for example. So there's a massive squeeze. And in a liquidity event, typically, and these more occur during panics, like the panic of 2007, for example. Pretty rare events, but when you get these short-term liquidity events, you essentially get indiscriminate selling from holders. And I don't see Bitcoin working well at all in this environment, because Bitcoin is not, at this point in its evolution, something that can be used as collateral. It's basically cash tied up in an asset class for future growth, but in a liquidity event, it's something that would be liquidated fairly quickly, I would expect, to free up cash. And it's something we saw during 2007, for example, with gold, where everybody thought gold would act as a safe haven. It did act as a safe haven once the liquidity event was over. Once the Fed stepped in, and once the credit markets were kind of stabilized, gold then managed to rally. But gold was down 40% from something like $1,100 to $700 during that sort of 6-month liquidity event. And I can see, if we get another panic like that, Bitcoin not doing well in such an environment. So just be aware of that. But we don't know what the chances of a liquidity event are in a coming recession. If we get more of an orderly unwinding and a more of a sort of a traditional recession, yes, the asset prices can go down 30-40%. The stock market can go even further than that. In that type of environment, I think initially as well, Bitcoin gets dragged down. But just like gold, I actually think Bitcoin is going to do really well in a recessionary environment, because in a recessionary environment, you have a risk-off environment, meaning that managers of capital are moving away from these risk-on assets, and they're moving more towards safety. And I can see Bitcoin being considered a safe haven, because it is completely non-correlated to the risk market assets. And just like gold, it is a place to store value and to store capital. So I think it could potentially really benefit from such an environment. And I do believe an environment like that is on the horizon. From a business cycle standpoint, we are overdue and extended for a recession, a worldwide recession. There's certainly central banks and world government, through their easing and easy money policies, have extended the natural traditional business cycle, but I don't think they'll be able to do that indefinitely. And we're seeing plenty of economic weakness and macro weakness in the economic data, certainly in Europe, also in Asia. We also have trade wars going on at the moment, which are not helping business at all. So I do see in 2020 or even 2021 the potential for a worldwide slowdown and recession. And I think Bitcoin is going to do well on that. Again, just be aware, though, in a liquidity sort of crunch, in a panic, Bitcoin is not going to do well. And I think more and more of these avenues to sell and liquidate Bitcoin into fiat that are coming on board now with some of these futures exchanges, and even just today with Backed, that looks like it's coming on, where you can settle in Bitcoin and the underlying asset as well. I think those are going to work both ways, right? And I believe in a liquidity event, it's not going to help Bitcoin's price. It's going to allow for greater price discovery and faster movement on and off Bitcoin, and that's not going to help. But again, I do believe that in a recessionary environment, Bitcoin will begin to gain favor. It will be viewed as a potential alternative asset class when traditionally asset managers are looking for more traditional risk on markets. It could be a good place to park some of their capital, and then some of these new institutional onboarding mechanisms that are coming on board will then work the other way, where it'll help to bring in some fresh capital into the space. So that's definitely my view on Bitcoin in a recession, and I think it's gonna work well for Bitcoin. All right, let's end with the left translated cycle possibility. So what do we have here? So originally I thought we would we would trade under the 10-week moving average for a considerable amount of time, build a base kind of similar to what we saw here in this bull market, where early on we trended sideways mostly, and then we broke out of that, broke above the 10-week moving average. I like the 10-week moving average for sort of intermediate and long-term trend basis. In general, in the bear market, you're trending below a 10-week moving average. In a bull market, you're essentially trading above that. We're already well or truly above that, and the separation between the 10-week and price tells me that maybe something else is going on. Certainly not this type of price structure. And this was something that everybody on social media was talking about for the longest period of time. And that is not the model that we're looking at right now. I think we are looking more and more like kind of what we saw here in this 2011-2012 timeframe, where we came down, we formed this low, we broke above the 10-week moving average. And look, if you look at this August timeframe here in 2012, it pretty much came close. It was 50% below, but it came close to where it traded just for a given month. And if I go to a weekly as well, you will see that it traded only up into this sort of 15 to 30 area for a couple of weeks. So there wasn't much price discovery at that point. And then similar to this one candle here, if you look at this monthly candle, December, if you go back to the November candle, okay, the high is only 11,300. So we've already taken out the high set in November, just weeks before the top. So you really have very little legitimate, let's call it legitimate price discovery, price action above that $10,000 range from 2017. So for all intents and purposes, even though we were sort of $6,000, which is a considerable amount below the peak, we've traded in this sort of $10,000 to $13,000 range for a far greater period of time than we did in 2017. So in some ways, we're already at kind of that double top period. We're already at that testing of the all-time highs level, even though from a nominal price standpoint, we're not that close to it. So to me here, it looks like we may even be flagging on a monthly, kind of how we flagged sideways here for 3 months. And if you look at the duration of this period here, we're pretty much at the same duration right here, allowing for price to maybe come closer to the 10-week moving average and then move higher. So we could be looking at a situation where, for the next month, let's call it, into September, there's a 60-day cycle low due in mid-September. We could get a flush down towards the 10-week moving average, maybe a move as low as 65, 6,800, and then that would serve to really shake out some of the bulls here that are on the shaky territory. Obviously, I don't think we get anywhere near the lows. I think it's crazy that some people are still talking about fresh new lows or a retest of the lows. Those are behind us. I think if we get anywhere near those levels, then you can pretty much kiss Bitcoin goodbye, so to speak. I think we get a drop down perhaps, and then we come back up and test the $20,000 level in December even, and then even break out by January, and just go and use and kind of have this trajectory that we have here. We have these massive candles, and get up to that 200 to 200 and say $30,000-$40,000 level by the summer. So just 12 months from this point, a straight shot up. So it's still the same type of price action that I was talked about earlier, but getting there in a much shorter time frame, getting there in a 1 year shorter time frame. And then from a 4-year cycle standpoint, it doesn't change where the next big low would come from in say late 2022. It just changes where the top comes in that 4-year cycle. So where we talked about before seeing 3 years up, 1 year down, 3 years up, 1 year down, we would see something like 2 years up and then 2 years down to the cycle. And a whole host of reasons why that might happen, but we are seeing a faster adoption in some of the institutional money and space. We also have the price structure right here, how it got way above the 10-week moving average so quickly, tells me that we may be seeing a massive run like that. And and why am I top early? Simply because once we get up to this $100,000 plus level, I think the level of retail involvement is going to go through the roof. I think a lot of people are going to be focusing on Bitcoin, and certainly the regulators and government bodies are going to be, I think, all over this. I think the next big threat for Bitcoin that may actually induce more of a bear market than we've seen in the past is probably going to be the response from regulators and the pushback that we're going to see. It's not something that kills Bitcoin, but I think from a threat standpoint, it's one that we have not yet fully appreciated. I think the market will appreciate it once regulators come out hard against something like this. So we could see a move up to this sort of still to this $200,000 level, then your traditional kind of crash, a bounce back up, right? Get people excited again, but of course that fails, and then you get this sort of winding action down. And again, still looking at that 2022 area, and I'm not drawing this perfectly, of course, but 2022 area, and then maybe a move down to say $40,000 range. I'm not sure exactly where the number would be, but the $30,000 to $40,000 range looks like a valid area for the next big 4-year cycle low. It's true for a number of reasons, but the main reason is that Bitcoin has shown us the ability to decline around about 80 to 85, 87% in a bear market. And if we have a 2-year period of decline, plenty of time for price to get down that far. And then if you look at kind of, let's just call it, that might be too optimistic, but let's just go from a $238,000 level and we decline 85%, then you're looking, oh, there you go, right at 34,000. So an 85% decline from a $230,000 level gets us around the $34,000 level. And that would mirror past 4-year cycle declines. Difference being here in a left translated cycle standpoint is that we had that top much earlier. So let's dissect this a little more. Here's a cycle low, 4-year cycle low. I'm going to draw the next 4-year cycle low right here. Okay, so what does a left translated cycle mean? So if we grab another color, the midpoint, and it's not going to be perfect, but let's just say that's the midpoint. The top here in the cycle occurred well right of, and I do have videos on this in the channel, so the top here occurred well past the midpoint, and that allows for price to spend more time going higher, and naturally you get this price increase and less time going lower. I think in this case you get a left translated cycle that occurs left of the middle. Okay, and here's the next cycle low, 2022. Okay, so here's the midpoint, roughly around there, and that top occurs left of that. Traditionally, one caveat here is when you see a left translated cycle, because there is less time going higher and more time going lower to the next 4-year cycle lower, you could even have a situation where price comes all the way back down and even tests the prior low or exceeds, and that becomes a cycle failure. I don't think that's something we see in Bitcoin, but all the more important, so here's where I distinguish myself from your traditional hodler. A traditional hodler basically says that I'm in it for the next 20 years and Bitcoin's going to $1 million, it's going to 2 million, and I'm just going to hold. And that philosophy, I guess in some ways, is okay if one, Bitcoin does get to $1 million or 2 million, and two, that you're able to hold through each of these 85% declines and these 200x moves or 20x moves that you see. Some people can do that. Some people have done that, and kudos to you. I take my hat off to you. But I would much prefer to be in for most of that rally, okay, get out for most of the decline, and then when I buy back, I'm buying back with 10 times the amount of capital and buying 10 times the amount of Bitcoin. So if I can do that for a couple of 4-year cycles, then where I may have started with 10 Bitcoin, I may have 50 at the next one, and then I may have 200 or 300 at the next cycle low. And that's really my objective. Obviously, I personally am not going to double down like that or triple down, so to speak. I would be taking capital off and redistributing it in other asset classes. I know some of you are thinking, oh, you're crazy. The whole world economy is going to collapse and every single dollar is going to be worthless. Well, I'm not one of those guys, unfortunately. I believe in Bitcoin. I believe in its future. I believe in its success, but I'm not putting every one of my eggs into that basket. Maybe it's just my experience. Maybe it's my position of where I am right now, where I don't want to risk that. Maybe I don't need to risk that personally as well, but that's just how I view the market. You're free to view it as you feel is the right, but that also goes back to why I only have overall kind of a 10, maybe a little bit more than that now, 10+% of net worth allocation to Bitcoin for that reason, because I don't need to add any more when I'm looking at sort of 20 and 40x moves in Bitcoin. That's going to do more than enough to really grease my portfolio and my wealth over time. I don't need to get greedy. I don't need to be sleeping, eating, thinking Bitcoin nonstop 24/7, and more importantly, worried about its success for me to be successful financially for the rest of my life. I don't need to do that because I know, again, like I said, if I can stick to this plan, even a small allocation is going to be more than enough to do the job. Okay, so a really long video today. I hope you've enjoyed it. A couple of closing points. Again, stop being a trader. If you want to be a trader, if you want to be active, by all means, put some of your Bitcoin in a trading account. Learn at least the very basics. Be a student of trading or investing, and give it a go. Obviously, only risk what you can afford to lose, but don't do it with your HODL 4-year journey account. That account, that Bitcoin should be off exchange, should be on a Trezor. Should be on a Trezor that's securely stored in a place where you're not going to easily get access to it. That's going to help you stay away from these emotional-based trading and investing decisions where you're getting in or out based on very, very short-term price action. And it's going to allow you to really HODL through all the way to kind of the next top or the next selling point and do that in a smart manner. If you are interested in trading, I don't plug any of my services really on any of these videos, but I'm going to just make one comment here. You can look in on the channel details. There's a link to Bitcoin Live. I post 3 to 4 videos per week. I also post trade alerts and trade ideas on that site. If you want to learn trading, I do my best to trade, to provide education around trading, around cycles on the short term. That would be more of a service for somebody like you if you're interested in doing that. But again, I've always said in the past, 90% of people will not be successful trading. The people that are successful trading in the shorter time frames are the ones that are really dedicated and focused to the art of trading and all the discipline that comes with it, and not people who are just following people on Twitter, for example, and trying to get in and out based on what they see on social media. So thank you. I do appreciate you following. Please subscribe to the channel. Please like the video, and more importantly, please share the video so others can watch some of these as well. Share on social media. I would really appreciate that. Again, thank you very much. Wishing you all the best, and I'll have a video out in the future.